Havells yesterday came out with its numbers, and while it was expected that the quarter would be a washout for most companies in the space, they seem to have done a lot better in what their estimates were, significantly better on the operational front as well, in line with what the largest companies in India Inc. have done. Let's get in Mr. Anil Rai Gupta to talk about his experience of the quarter that it seemed like a quarter, but it wasn't. And what can he tell us about what the outlook could be like? Mr. Gupta, good having you. Thanks so much for taking the time out and speaking to us at BloombergQuint. Hope all is safe.
All is safe. Thank you very much, Neeraj.
That's good. Can you tell us a bit about the quarter, or the quarter that was, simply because I'm guessing for you as well, at least 33% of the quarter would have been a washout?
Yes, not only 33%, but more than that. So 45%, March and April are big months for seasonal products like fans and air conditioners. So we actually saw almost like a 45%, 50% washout. You said about the experience in the first quarter. I wish this experience is never experienced again. So, but every crisis gives you opportunities to relook at your business, and I think that's what we've done in the last 2 or 3 months. So obviously, one time the performance looks quite tepid right now, but given the fact that what the situation was, we've definitely turned out much more satisfied as compared to what we initially started the quarter with. But going forward, I think we are excited with the opportunities, with the kind of initiatives that the company has taken during last quarter, the efficiency drives which the company has done. So I believe when things come back to normal, we should be looking at a stronger company.
Did you sense some bit of normalcy returning in the month of end June and maybe the first few days of July, or is it too soon to say, because it could be a pent-up demand or a mixture of a lot of factors?
As far as sales are concerned, definitely yes, there was normalcy in the second half of May and the entire June. I would say that it was better than expected. Could be pent-up demand, could be many reasons. Also, consumer behavior changing, and we also saw that consumer products did better than even the industrial products, because industrial products were taking more time for the projects to restart, and they were able to come back on the sites and projects. So we saw better traction in the consumer products. Continuing into July, first week of July, also things looked quite stable. However, in certain pockets of the markets, things continue to go up and down because of the constant lockdown. Some states announced maybe a weekend, Saturday and Sunday off, or some states have now said, okay, 2 days a week will be off. Or some states have announced a complete shutdown in certain markets. So there is up and down going on at the present moment. So it's difficult to immediately say when and how things will become normal. But it's okay. I think the companies have also realigned their cost structure so that they can take care of this kind of a demand.
Just a follow-up though, you reckon that whether by force of hand or otherwise, but you and some of your peers, the largest companies in India, have relooked at the cost structures and the efficiencies, I guess, in the last 3 months. Is this the new normal, or do you reckon that this is a bit of a temporary situation and cost can't stay at these levels and they eventually might go up a little bit?
So again, I would say, Neeraj, good companies would have looked at their good costs and bad costs, and sometimes bad costs continue to remain even when things are going normally. When there is no crisis, people keep, let's say, going along with the bad costs as well. I think this shutdown or stoppage of work has forced companies to relook at their efficiency parameters, their cost structures, what are the good costs to continue to retain, and what are the bad costs if they've taken out in this quarter, which should not come back in the coming quarters or coming years. So those are the kind of decisions which I think most of the companies. But to answer your question, yes, a lot of the cost will come back. For example, marketing communications, you need to continue to develop your brand in the future. You need to continue to expand your distribution channel. So there will be certain costs which will come back. But certain bad costs, which are inefficiency costs, or new ways of working. So, maybe more of use of digital technology, maybe even visiting customers could be a lot on the digital channel. So a lot of things will change in the coming times as well. So I think some good costs, the good costs will remain, bad costs should not come back.
Yeah. Well, Mr. Gupta, a small question really. You kind of, if I can use the term, morphed into a much larger player by virtue of the categories and that you have given out in the last 6 months, the distributorship that you've really expanded as I read reports. Can you tell us a bit about what a new normal situation for a company like you could look like? Because compared to what Havells was, I think 12 months ago, you're a significantly larger player now. So in a post-COVID world, how would this larger Havells operate of sorts? Whether it be via distributors, via direct channels, or via the increased number of products that you have?
Well, I think I would not say that there has been a complete transformation in the last 12 months. This has been an ongoing exercise for many, many years now. Our focus on expanding categories in this, in our related diversification, our related fields has always been there. We were a switchgear company, we got into wires and cables 20 years ago, then fans, then lighting and domestic appliances, water heaters, and recently personal grooming, industrial products. So there has been a constant expansion of categories and constant expansion of distribution channels over a longer period of time. Yes, it has made us a larger company. We've acquired Lloyd in the last couple of years back. We looked at revamp the entire supply chain manufacturing of the company in the last couple of years. So there, I believe that going forward, we are far more stronger entrenched company in terms of our availability. I would say that given the number of categories that we have and given the kinds of distribution channels which have now sprung up in the last 4 or 5 years, not just the traditional offline channel, online channel has come in, modern format stores have come in, the new export opportunities have now started opening. So I would say our strategy would be more of omnipresence in all kinds of channels with large number of product categories.
No, but sorry, excuse me if I misrepresented my question, but I thought that over the course of FY20 and thereabouts, you had a bunch of other initiatives like this enhanced exposure to rural markets or about 15, 20 new product SKUs or product categories that you've launched as well. And that's what I was trying to refer to. But having said that, Mr. Gupta, what do you think this whole Made in India initiative does for you? Because when I look at you vis-a-vis some of your peers, you're probably a lot more self-manufacturing Made in India than some of the others as well. What does this bring for you? I was speaking to one of your peers, if you will, Shekhar Bajaj, and he was saying that he was open to probably even doing back-end manufacturing for brands in Europe if the opportunity presents itself. How do you think this pie opens up for a large company like you?
Well, I guess for us, I would say that this has been the philosophy of the organization that we need to be we need to be a pure play company. So if we offer a product, it should be backed by right R&D, right manufacturing. We just should not be dependent upon small scale manufacturers or products manufactured in China. We should have our own strength in whatever we are selling. That's why we have been able to build confidence in the customers' mindsets. So even before Make in India, even before Atmanirbhar Bharat, Havells had always invested heavily in manufacturing. And today, 95% of what we sell are sold, are manufactured in-house in our own factories. Even when we acquired Lloyd, 100% of the products were imported from China. Today, not even 5% of the products are imported from China. It's all in-house, and we are completely going away from the dependence on China. So if we want to cater to the world, we need to have the right infrastructure. If you want to cater for companies in Europe, we need to have the manufacturing infrastructure. And thankfully, we've invested in the past, and we continue to invest in manufacturing. So not only India, I think there is a great possibility for looking at exports in a big way. With all this whole change of mindsets, not only in India but all over the world, they also need to want to reduce their dependence on one country. So I think for India, it is a great opportunity.
And last couple of questions, Mr. Gupta. One, I believe the Lloyd's plant is nearing completion. Just wondering, what about the capex intensity, especially in these times? Would that companies traditionally would anyways grow slow because you do not know what the demand situation would look like, but some of your projects are nearing completion. So is it safe to assume that FY21, even a normalized FY21 second half of FY21 would see lower capex under normal circumstances and more so in the current circumstances?
Well, Lloyd plant thankfully has come on stream later last year, and now we're catering to the market with our own production. At the start of the COVID time, the lockdown time, we relooked at our capex plans, and there was certain feeling that if this continues for a longer period of time, we may have to postpone. So we just relooked at it, and I believe now coming out of the COVID, we need to relook at it again probably, and it will take us some time to relook at the entire capex plans for the next 2 to 5 years to see what opportunity now lies ahead for branded manufacturers in India and globally. So I think if anything, so there's no stoppage of capex, but if anything, it could increase in the second half of the year. At least the outlook will start looking very positive.
Either for an organic opportunity or for an inorganic opportunity?
I would say that when you're talking about capex, it's mostly organic opportunity, and we are looking at enhancing our manufacturing capabilities in many product categories where we could become global players, something like in air conditioners or fans, which has hitherto been completely dependent upon China. I think that's where big opportunities lie for India.
But open to inorganic moves as well, Mr. Gupta. I mean, you've always been, but I'm still just wondering.
Yeah, always been, and I think that doesn't change the DNA of the company. I think 1 or 2 months of COVID, we need to relook at the entire thing. But the DNA of the organization is growth through organic or inorganic means, and whatever fits in financially and strategically, we need to constantly be aware and open to it.
Okay, one last question, Mr. Gupta. You referred to this stop-start thing in India currently because some areas are going under lockdown otherwise. What do you think is a bigger challenge? Would it be a lack of demand because people have lost jobs and there are lockdowns, etc. coming up? Or would it be relative difficulties for companies to meet, I mean, if demand were to come back, to meet the supplies simply because plants, manufacturing, etc., availability of workers, all of that might be under question mark? You or India Inc., whatever.
I think things were coming back to normal much faster than expected post the lockdown, and this whole availability of manpower and a lot of migrant labor going away, things were coming back to normal. It's just that when I talk about these shutdowns and all, these are in pockets, and wherever there's a sudden spike of COVID cases, the local authorities take decisions to close down. If there is a market there, if there is a manufacturing facility there, that also gets affected. So I think going forward, the bigger challenge would be to make sure that the consumer demand comes back and on a sustainable basis. So whether it is the real estate coming back, the projects coming back, people investing back into their homes, there could be some pent-up demand because of the consumer psyche changing, behavior changing. But overall, the income levels have to continue to grow for the demand to remain stable. And that's something which all the companies, all the country has to look at to ensure that continued growth continues to happen. What is suitable for India? That kind of a growth is required.
Okay, I won't press you for numbers, Mr. Gupta, because I understand it's difficult to give them out right now. But thank you so much for talking to us today on Talking Point and giving us your thoughts. Appreciate your time.
Thank you so much, Manoj. Thank you.
Stay safe.